Hello, this is Randy Lindsay, and welcome to today's Hawkeye Update. What I want to do this week is start out by giving you an update on where the overall market is in general. To do that, I used my Hawkeye Fatboy. The Fatboy, as seen over here, is our current strength, relative strength meter. We're looking at individual instruments relative to each other on a scale. As you can see, I'm looking at the S&P 500, the Nasdaq, crude oil, Dow Jones, Russell, and gold. I'm going to give you a quick update of the market based upon what I see from my Fatboy, and we'll look at the live charts to see the corresponding data. All right, looking at the S&P 500, you can see based upon the red line here that we have come up into an overbought or a relatively high strength area, and it's starting to roll over and give that strength off. And you can see that was on the date of looks like September the 16th that it peaked, and the 17th was the first day that we would be able to see a real change in the energy flow in the S&P. The Nasdaq gave a sign one day earlier, that's shown by the green line. You can see that the Dow Jones again gave the same signal right about the 16th, and we could see on the 17th that it was starting to turn, and then the Russell on the 18th. All during that time, you can see that the trend was in strength, and that they were almost all overbought but looking at turning. So during that period of time, you can look at the daily chart of the S&P 500 here, futures index, and you can see that on the 16th, right here, you can see that we had posted a local low, a white volume bar showing that price has actually started to respond to that energy flow. And then you can see that we are in a consolidation range, which is just short of the all-time highs. So we're looking at this as a stopping point. If energy continues to flow out as we see that it is, then we would continue to see this either stabilize or drop back down into this next range right here. So I'd be looking for potential drop down to about 2950 to 2900 range if we fail to stop support at 2959 area. Right. So we are definitely in a consolidation range. We are in demand zone, but we need to see that hold. Otherwise, the energy coming out isn't going to hold. Let's look at the next one. The Dow is going to be very similar to the S&P. The Dow is showing it is topping. It has not breached new highs. It's failing to rotate to new higher prices, and it's already starting to give off that energy as well. So you can see the rotation is definitely to the downside. Nasdaq, very similar story, failure to meet new highs. Volume is clearly trying to be up to the buy side, but it's not successful. It seems to be failing as well. It's plateaued out, and if I were to put my zones on, then you can see that again we are in a trading range, very tight zones, not a lot of clear space. So price is probably going to stay in that range, if not bounce back down to the 7600s if we continue to see this weakness coming out. All right, crude oil, that's another story on the markets. You can see that crude oil has been gaining with strength. As you can see from the Fatboy, crude oil has gone through some pull downs and pull ups. It's not a straight line of strength, but it's continuing on a trend of strength. And is currently in an overbought area. It's just now today starting to show signs of weakness. So the attacks on the Saudi oil fields last week showed a spike in the price of oil, which has very quickly recovered back down into our consolidation range that we were in prior. It hasn't gotten down to the previous prices as we saw $54, $55 as the price before the strike, and now you can see it's 57 after. But we have gotten down into that same consolidation range we were in prior to the attack. If you can also see, there was a consolidation wedge or triangle where the price was winding up to this, and if we were to see the weekly zones on that particular one, you can see that we did come up and hit overhead supply, and we are coming right back down to the falling upper edge of that falling wedge. Now that we know that previous resistance becomes current support. So we are looking at this line to give us potential support before a retake of that if the Saudi supply does not stabilize and regain. There have been news over the weekend that show that the prices of oil are going up another percent over the weekend due to Saudi supply not meeting the expectations. And last but not least is gold. As you can see, gold is the only one that has been extremely down and oversold, but it is starting to show a real increase in strength. And so from the strength of gold coming into this energy that came out of it was just simply a stabilization. You can see right here that all the way through August as the rally in gold peaked, its volume and sell-off and profit take were the dominant news here. However, we're starting to see that volume is coming in. Right here, you can see a big green volume spike on new lows, starting to show that there's increased pressure on gold for prices to go up. And we can see that the energy and strength of gold is rising. So we would expect that to continue to rise as well. And we saw the indication of that right here on the 18th with a very large buying volume spike and price continuing to rise from that. So that's what we would expect to see. So take advantage of the tools that we provide you. On the link on this page, you can get a copy of our software just by clicking on the link at a very, very good discount. You can also download our free ebook or sign up for our free training classes every Wednesday to learn more about how we trade the Hawkeye way. Thank you.